I'm Owen Bigland. This is the Inside Edge video blog. Okay, I'm going to call this one, Be Careful What You Wish For. So, for the last year and a half, of course, I've blogged about this a few times, many times actually, that, there's a lot of people out there screaming from the rooftops to start increasing interest rates. The Fed was too loose on monetary policy, printing too much money, which they did. It drove up the price of real estate during COVID and the stock market. Now we're getting a little bit of we are getting a correction now, of course, as the Fed starts to tighten both in Canada and the United States and raising interest rates. We've already had a couple of interest rate hikes. We're going to have another one here coming up in a couple of weeks. As I speak, July 13th will be the next one, probably 50 basis points. In the US, they had a 75 basis point hike, and it looks like they might have another one later this summer. So, of course, people are saying, finally, let's start raising the interest rates, and it'll make things a lot more affordable. It'll bring those stock prices down, and it has for some stocks, tech mostly. A lot of my dividend payers, like General Mills and Pepsi, and some of those have barely been scathed. It's the kind of the tech with no revenues and no hope of any revenues, these meme stocks that have been really crushed here. But it's off on another tangent. But, you got to be careful what you wish for here. And I want to follow this up with an article that was in the Wall Street Journal on June 26, basically saying, be careful what you're wishing for. People hoping to get into the housing market because interest rates are going up, it's just not happening. At least it's not happening in what most people are looking to buy, starter homes and condos. These interest rates are going to help the wealthy because what's really going to be going on sale is going to be luxury detached homes, luxury condos at $3, $4, $5 million. And it's not a problem for most of those buyers because, hey, the prices are off and they're putting down 50, 60, 70% down anyways. They're not borrowing a whole lot of money like the first time home buyer is, who's using a lot more leverage. But essentially, interest rates are up, so it's a squeezing affordability. Yeah, the cost of that detached house in East Vancouver has come off $100,000, but your borrowing costs have probably made up for that, pretty close to that. It probably tacked on another $75 in borrowing costs. So, it's really, affecting the starter level market, both in Canada and in the US. These interest rates, sure, are making homes a little bit more affordable, but you're making up for it with the increased borrowing costs. Inventory continues to be very low. We did not see that spike in inventory that a lot of people were expecting this past spring. A lot of sellers are holding tight. And I've done many blogs on this, and one of the reasons they're doing that is because of the stress test. Difficult to qualify now for anything that they want to move up to, because not only having to qualify at the current rates, which are up, let's call it 4.8%, they have to now qualify at 6.8, close to 7% with the stress test. So they can't sell and move into a bigger home. Rental rates, they talked about this in the Wall Street Journal as well. If you think staying on the sidelines, tight inventory, prices aren't really coming down all that much on the starter level stuff, and you're seeing that here in Vancouver too. Let's stay on the sidelines in the rental market. Well, that's just brutal right now. I've done many blogs here on the current status of the rental market. I'll do more later this summer and into the fall. It's unprecedented. The same thing is going on in the US now. Rental rates are spiking. The interest rates have taken them out of the purchasing market and kept them in the rental market. Supply in the rental market is bare bones minimum, and up go the rental rates. And you're now starting to get into bidding wars on these rental rates. One bedrooms I pointed out in Vancouver here that were $2,150 3 years ago are renting for $2,600 now. And you're going to be lucky to even find one. Wall Street Journal, June 26, what it takes to buy your first home. Rental rates, rising rates, thin supply, bidding wars on entry-level homes is what they're talking about. Buyers are getting frustrated. They're getting outbid. Their affordability, sure, the prices come down a little bit on what they're looking to buy. Not very much, though, on the starter level. But, of course, the interest rates have gone up substantially. So their affordability factor actually has gone down here, even though the prices have come off a little bit. Interesting stat they threw out in the Wall Street Journal, and this would be the same thing for Canada. You know, home ownership is the key wealth building tool for Americans. For the U.S. middle class, the median homeowner had $255,000 in wealth in 2019 when this was done. Compare that to $6,000, $6,000 net worth for renters. In Canada, this would be pretty much the same. You know, the net worth of a homeowner is tenfold to that of a renter. Homeownership is the biggest and the greatest and the best wealth creator we have, bar none. And even though interest rates are going up, they're still well below our historic lows. You're doing double duty. You need a roof over your head anyways. You need shelter. The tough part, though, is getting the down payment. Once you've got the down payment, you have crossed, as I've said many times here, a huge financial hurdle in life. The cost to hold that mortgage isn't much more than what it's costing you to rent, and you're getting zero back for the rent. And you're living like a gypsy, pretty much. You know, buyers that have been stepping out of the market because of the bidding wars, you know, are finding that it's getting harder and harder to save for the down payments. With inflation running at 8.6% right now in the U.S., it went on to say that, you know, finding that money to set aside to put the down payment together is getting more and more difficult because your paycheck now is going towards eggs and milk and gas. You know, it would be the same thing here as well. The median rents in the U.S. over the last year have increased 15.3%. So, you know, there's no place to hide here right now. And this is the exact same thing that's going on in Vancouver. You know, interest rates are going up. They're barely touching the entry-level market as far as prices go. What is getting hit hard, or sorry, not even hard yet, but what is going to be much more affected is going to be the higher-end stuff, the detached house for $6 million in kits, the $8 million house in Point Grey, the $3 million Vancouver special in Mount Pleasant, the $3.5 million 3-bed in Cole Harbour. Those are coming down in price, but it's a pretty rare buyer for those. If you're in the market for something like that, hey, not a bad opportunity here. And it might come down further. It probably will. But if you're looking for a good 1-bed in Yaletown for under $700, it's a tough market. And of course, the interest rates are making your affordability less and less every month. We're going to get another rate hike here. Going onto the sidelines to rent is no gravy train. It's horrible. You're going to pay $2,600 a month to rent a basic 1-bedroom that you could buy for $675. So it's a bit of a quagmire. Now, it comes down to what I've said, talk about in my book, that mirror test. There's nobody is going to save you here. There's no cavalry on the way. I know the NDP and the city of Vancouver have been telling you for years and years that they're going to get a handle on this and they're going to make those condos affordable for everyone. Everyone's going to live in Yaletown and the West End, and we're working on it. Don't worry. They're lying to you flat out. And that's why they continue to use these boogeymen like the empty homes tax and the foreign buyers and the speculators and the flippers. It's all a big lie. The bottom line is that Vancouver is an incredibly desirable city. People want to live here, not just from the Lower Mainland, but from other parts of Canada and the US and Asia and every place else. If they've got money, they're going to come to these desirable cities and live the West Coast lifestyle. It's not just Vancouver. You know, Vancouver isn't an anomaly. It's like this all the way from here down to San Diego on the West Coast. Everything is tilted to the West Coast. So if you want to be able to buy in an incredible city like Vancouver, you're going to have to take that mirror test. You're going to have to buckle down, find ways to earn more money, save more money, and get your foot in the door. And you don't have to start with Vancouver. As I often said, you can buy a good older wood frame condo in Richmond for $350,000, $375,000. Get out of the renter treadmill, get into something like that, save your money for another 5 years, and then move up the ladder to something in Vancouver. That's how it's done. That's how I started. You know, you don't start with a Four Seasons hotel. You start with a Motel 6 and then move your way up. I started with a dilapidated old wood frame was my first purchase, renovated it, saved my money, and gradually moved up the ladder and kept going from there. That's the way you've got to do it. But Wall Street Journal, they've been doing a number of these. The June 26th, be careful what you wish for. what it's taking to get into the housing market right now. The higher end stuff is coming off a little bit. The entry level stuff has barely been scathed. Interest rates are going up. And of course, the rental market is incredibly tight. Rental rates have gone up 16% in the last year in the US average. You take in some of the more expensive cities like Los Angeles or New York or Miami, which has gone crazy, or a city like Vancouver, they're up far more than that. I'm Owen Bigland. As always, thanks for watching. I'll see you next week.